How's it going, everyone? In this video, I'm going to be going over Solo stock, why the stock sold off to the downside when Citron tweeted some information about this specific company. I'm also going over exactly Citron research history, how they make their money, and why they target electric vehicle companies recently. They not only targeted Solo, but they also sent out an information that really affected NEO stock for a day, and it really sold off or recovered NEO stock. But we're going to go over exactly what is the incentive and how they make their money shorting stocks. So make sure you stay tuned. I'm going to cover exactly the important information that you need to know. Now let's get right into the video. So this is Solo stock. I made several videos about this company. You can go and watch those videos in detail, talking about the investor presentation, what this vehicle is all about, what is their market share, and what is their potential growth for the future. So I made a breakdown video about that recently, so you can go and check it out. But the stock price, significantly started to sell off aggressively when Citron Research tweeted about this company on their Twitter page. So we're going to go over exactly and see what their tweet was. So this is basically the Twitter page for Citron Research. They basically come out and they announce what they've been finding about these new companies, these EV companies. And not only they have to be EV companies, they talk about several other companies that they believe that their stock prices are overpriced and investors should be watching out for, be careful, and then they basically short the stock. So I'm going to go over exactly in detail what shorting is later on, but let's go over exactly what they talked about NEO. So yesterday, when NEO stock was aggressively going to the upside, almost hit like about $12, $12.50, it was going up. And they eventually tweeted that Solo is the EV trade for real suckers, not one real institutional investors here. They had a great concern just a few weeks ago. Oh my God, over 1 billion market cap. So this is one of the tweets that they said. I talked about exactly a few days ago also. Who's invested in this company, most of the shares. You can go and check out the video. It really breaks down exactly what you need to know about Solo stock. So they also talked about Solo is a complete joke. Target price 2. What other EV might be overwhelmed? This is laughable. Under 6 million R&D last 12 months and 6 cars delivered in 2 years. This stock will be the first to trade back to 2 when frenzy's over. Nothing here. Company run out of an apartment building. So that's a really interesting tweet. So as you can see, you got 494 likes, more than 100 retweets, and the stock price, of course, decided to sell off to the downside, as you can see over here. So the stock, really it was aggressively going to the upside and just pulled back all the way to $10.81. You never know what's going to happen on Monday, but we might expect the stock to gap down, because usually when these Citron Research, when they attack these stocks, really, these stocks really drastically go to the downside. So recently, of course, when you go to their website, they made a detailed research about NEO stock, so they said they're bullish on NEO 2 years ago, but after when NEO stock hit new 50-week highs a few days ago, they came out and they released their research talking about exactly why NEO stock needs to go down to $25 and their thesis. So as you can see over here too, when you go to their website, this is citronresearch.com, voted #1 activist short seller by the Activist Investing Annual Review 2019. So what that basically means, like when these, researchers of this website or the owners of these research companies, what they do is they short companies. So when you short companies, we're going to be making money if this stock price drastically goes down. And the way you do it is, let's say you have a brokerage account, you have the options to short sell. So if you place an order to short sell, what they do is they borrow the shares from other individuals that are holding the stock, and they sell them at the market price right now, expecting to buy it back later on when the stock price goes down to the downside. So that is how short selling works. And they released their research and talking about, bashing the company, why it's not going to be successful. So investors can also panic and sell out of those stock so they can eventually be making money off of their short position. So they announce it. An example of research that they released right now is, of course, for NEO stock. They're targeted. They said they're bullish on NEO, but right now, they created a thesis about why NEO stock needs to go, is going to be selling all the way down. Their target price is $25. So they have a short position on NEO stock, and they're going to be making money when the stock price goes down. So when you look at some of the theses they talk about NEO, they covered, NEO stock can potentially be affected if Tesla lowers the price. That is one of the theses that they have. And They believe that, Neo's rise to $45, $50 is just really overpriced right now. And that is their thesis. When it comes to the stock market, really, there are bulls and bears, and Citron Research is on the bearish side, and they short companies and they make money to the downside. And of course, a few years ago, they're also bullish on this, on Neo stock too at the same time. So when you look at exactly when they tacked Solo, Solo, of course, sold off to the downside significantly, and they said that not a lot of institutional ownership, of course, and the stock dropped to the downside. So what you need to be doing right now is that if you are holding Solo for the long term, of course, depends upon when you got involved. On the past videos that I posted, people commented that they got involved in in Solo stock when it was trading below like $4, $5, so you're up significant, so in the short term, there might be more volatility to come. And as I mentioned on my previous video, the share outstanding for this company is not a lot. It's like 69 million shares available. So it can really swing up and down a lot. Like within one day, it was going, to close to $14 and it went all the way down to $10. That's like a $4 swing. So that is, you have to be super careful about it. And if you still believe in the company, if you still like the design of this vehicle, if you see the future, yesterday's video I covered exactly how they're planning to expand, what's their target market share they're trying to compete with other companies. This is one of the cheapest electric vehicle cars that you can buy. And also they try to pitch it to individuals that are in California, because California is a market where there's a lot of buyers for electric vehicle companies, electric vehicle cars over there. So they have the right target over there, and they're trying to really expand it. So if you like their business plan and how they're approaching it, of course you can invest it for the long term. But however, you still have to take into consideration what Citron Research also said. So they said, they don't have a lot of deliveries. When you look at exactly what they said over here, the company's still running in an apartment. You never know. Other companies like Apple, started in a garage, so you never know the potential of it. So if you still believe that this company is going to be more profitable in the future, is going to expand in the future, definitely, take into account, you can just ignore what Citron Research said. They just want to create panic just like they did. And the stock price, they got exactly what they wanted. The stock price went to the downside. So that is one of the things you want to understand too. So make sure you do your own research a lot and understand that there's risk. There's a lot of people that are going to be trying to making money off of people right now in this current moment when the stock price all the way goes down by creating panic and things like that. And if you decide to get involved in it, understand that there's a risk investing in the speculative companies, especially this company was also as a penny stock right now, and a lot of people are saying that's a pump and dump. So you have to take into consideration that too. So now on the other hand, if you're somebody that wants to take this side of shorting it, just like what Citron did, you can be able to short this company right now. So of course it's overextended to right now. It's really up to the upside, and you can definitely risk, the $14 area, and you can open up a short position. You can definitely make your money if the stock price goes down. And one of the risks of actually shorting stocks is that if the stock price goes, to the upside, there's really, like, mathematically it's impossible, but your risk is infinite to the upside. The stock price can go tomorrow, to $50, $100, to $150. You never know what's going to happen. But if you short the stock, the lowest that it can possibly go is to go to zero. So your downside right now is the stock to go to zero. You have a $10 profit range when you're shorting it. However, when you go long with a company, you have a huge upside to the upside. So, the stock might go, to 25, 20, 30, depending upon what company you invest in. But if you're looking at Solo, that might take a while for that company, to go to $100 or $200 in the future. They have to really deliver, and they have to really expand a lot for them to go to that price point. But if you see there's an opportunity for you to short the company, the stock is overextended to the upside, just wait for the first red day, for the stock to pull back to the downside, that you can definitely risk off of, the $10.81 or the $14 area for you to take a position to short the company. So of course you have to be super careful. We talked about, if you are somebody that's, shorting this low float stock, it's super risky. Anytime, any moment, the stock can gap up and it can provide a short squeeze. There's a lot of people also that can pile in and try to short the company following what Citron just said. So there might be a lot of short sellers, and the downside of that too, it can cause a short squeeze. So what a short squeeze basically means is that when you're shorting a company, the stock price, can go down. But however, for you to lock in your profits or to cover your position, you have to buy it back. So you borrow your shares, you sell it, and then you have to buy it back for a profit, right? Since if the stock price goes down, you buy it back for a profit. So when you buy it, if there's a lot of short sellers that are covering that, they're scared maybe the stock price can go up, that is going to theoretically going to provide a short squeeze. So what that basically means is that there's going to be a lot of influx of buyers that is going to be coming in, and that is going to cause a short squeeze, and the stock price can drastically go higher and higher and higher. So that is one of the things you have to be careful about when you're shorting stocks. There's a short squeeze that can possibly happen, and that is one of the downside of it. And also when you actually have to take into account, like when you're shorting companies, you have to maybe pay some borrow fees, because you have to borrow the shares for somebody that is holding the stock right now, and you have to sell them in the market. So your broker can charge you an interest for the amount of shares that you borrow. Let's say you borrow 100 shares, they might charge you, maybe 10, 20, or even $1, for their interest, depending upon how many days you're going to be holding the stock in your account, shorting it. So you have to take into consideration that you have to pay some borrow fees too. So those are the 2 or 3 things that you need to take into account before shorting it. First is you might get short squeeze. Also, you have to pay some borrow fees. And the third thing is because the stock price can go gap up, and literally your loss can be infinite to the upside. So you can really lose more than you can afford by getting involved in a short position. So when you get in long, the maximum that you can lose is the amount of money that you put in. So let's say I put $10,000 in solo stock, the max loss for me is going to be $10,000. But however, if the stock price, I'm short a stock, and the stock price goes to, it doubles, it triples, and it goes to $100, you're going to get a margin call, and you're going to be losing a lot of money. So that is the downside of shorting it. But of course, Citron research, they're going after this EV companies like it's nothing. First it was Neo, now they're going after Solo. They waited for the stock price to literally go to all-time highs for them to basically short it. So that's exactly what they do. They try to cause panic so people can sell, and also they can make a profit off of that. So that is one of the things that you can take into account too. So if you want to join the other side, becoming bearish and shorting the stock, it's nothing bad about it. I know that people get a bad rap about bears, like shorting stocks is unethical and things like that, but it's the stock market. You can do whatever you want. You can go long, you can go short, and depending upon what you do your research on. If you find evidence that the stock is going to go to the downside, you manage your risk, and then you go and you take a short position. So that is one of the important things you want to be doing. So if you have any questions about this company, or if you have any questions about shorting, and if you have any kind of questions about Solo, if you like the car, if you're somebody that wants to buy this car in the future, let me know. But the majority of people that have been commenting in the past, they've been talking bad about the design. Look at the back of the car. It's not really that attractive, but the Solo, the sports car that they have over there, it's like 2 cars, 2 doors, and it has 2-seater, and you can definitely drive a sports car electric vehicle. So it's cost like $50,000, but this one is going for $18,000. So if you can spend $18,000 on this car, it's really quite interesting. How they are going to get a lot of orders and things like that. I know there's a lot of people that are interested in buying this car because they have some pre-orders, and we'll see how the company is going to be growing in the future. But in the short term, people like the stock, people like the volatility. The stock has been going to the upside, but the car design is definitely one of the things that's questionable on people's minds. So make sure you like the video. If you have any questions, any comments, drop in the comment section below. But I'll catch you on another video. Have a wonderful day.